All right, what's up, AJT Jungle? We are going to get started again on our price action and technical analysis program. This is the second module. First module, we gave you some background information. We're going to give you some more fundamental information. Today, we're going to build on it. But just to kind of review what we talked about last week, we posed the question, is price action analysis the same as technical analysis? And, it's yes and no answer. Price action is a part of technical analysis, but technical analysis is not a part of price action. Okay, so price action states that it's the movement of a stock's price plotted over time. Technical analysis is the study of the price movement and patterns of a security. Also, technical analysis uses indicators, which are, lagging. They use lagging indicators. Also, we talked about price action analysis and how it allows us to make sense of a market's price movement, and it provides us with explanations that serve as a way for us to build a mental scenario to describe the current market structure. And that's what we're going to do today when we start looking at candlesticks. Also, experienced price action traders often attribute their unique mental understanding and gut feel of a market as the main reason for their profitable trading. That means they're able to understand and comprehend the candlesticks and what they're telling them, and they're able to get a good feeling of what's likely to happen based on how the stock is trading right now. Okay, they're not using indicators based on past data. They're looking at what's happening right now, and that's the price action component. Okay, price action analysis makes use of the past history of a market's price movement, most typically focused on the recent price action of the last 3 to 6 months. This is when we're doing our morning, when we're vetting the stocks, looking to see, do we have windows of opportunity and all that good stuff. That's what we're talking about. But I like to use a 1-year chart. But honestly, 3 to 6 months practically lines up with the year anyway. So, all right, Nvidia broke. Should be running to 790. Alright, so this price history includes the swing highs and swing lows in the market, which I call pivots. I call the daily pivots. Those are the swing highs and lows that we mark on the daily chart, as well as support and resistance levels, and those tend to be those additional support and resistance levels tend to be the daily the daily moving averages. Also, we talk about to keep it simple. We like to keep it simple, stupid. in reference to the fact that trading is something many people overcomplicate. We overcomplicate it because we can't believe something so simple can be so profitable. So we have to overcomplicate it. We look for people using these buzzwords and language that, makes us feel smart, when all you're doing is kind of overcomplicating it. Also, using all these different studies. I saw somebody's chart with cam pivots and Fibonacci lines. I'm like, this chart is giving me a headache. I can't even look at it. So, most of the time, price action traders, they don't even have moving averages on their chart. They're just trading based purely on price action and what I call the daily pivots. They may not call it that, but that's what I call it. All right, and we talked about what we're going to be looking at going forward in terms of the candlesticks and how they're put together and all of this. So just to give you a little bit of history, you probably have heard this already, and why we call it Japanese candlestick charts. We use these as a way to describe price movements in a tradable security. And for me, it's a stock. Okay, and candlestick charts are most often used in technical analysis. It's used in price action analysis and technical analysis. Candlestick charts are thought to have been developed in the 18th century by a Japanese rice trader. As people go back in time, they tend to come up with, the charts came out later, and all of this, but we all know it came from Japan, and it was part of their rice trade. So it was introduced to us here in the modern world by Steve Nissen back in 1971. I think that's when he published his first book on candlestick charting. Now everybody probably have read that book. A lot of people who came in wanting to understand and learn about candlesticks. But one thing, there's some good information in it. But one thing I want to point out and reiterate is that you want to be able to read, understand, and interpret each candlestick. And the way you do that, you want to see the candlesticks forming as well, because that helps out tremendously. It's easy to identify patterns and things on a dead chart, but reading it and interpreting it as it's happening is an art form. It's a skill, and it takes time to develop. Too many traders get frustrated because they can't get it as fast as they want to get it, and then they start doubting what they're doing. But it takes time. It took me time to be able to figure out and comprehend the price action that will allow me to come in the market and just trade freely. That's our goal. So most of you already know this, but just in case you don't, when we're looking at a candlestick, the body of the candlestick shows where the stock opened versus where it closed, and the wick symbols the high of that candle and the low of that candle. Okay, so I'm pretty sure all of you have kind of figured that out yet already. That the body shows you where the open and the close is. If a candlestick closes below the open, it's going to be red. If it closes above the open, it's going to be green. And the little pieces on top of the candle and the bottom of the candle are the wicks. Okay? So everybody should have a really good understanding of that, what each candlestick is telling us in terms of the body and the wicks. So what we're going to do today is talk about each individual candlestick. Okay, I want you to understand what each candlestick is telling you. Now, it's impossible for me to show you every candlestick formation like this. Okay, but they're going to be similar. They're not going to be the same. They're going to be similar. Okay, so this is the most bullish of all the candlesticks. It opens at the low. Remember, when the stock opens, it puts in the bottom of the body. And as it moves up and down, it may create a wick. It may not. But this practically opened at the lows and continued to get stronger throughout the time frame, closing up here at the high. Yeah, it's got a little wick at the top, but that's nothing. That's just normal volatility of the stock. So this is going. Whenever you see this, this is the strongest of the bullish candles. This opened at the low, closed at the high. It closed with momentum going to the long side. Now these are the second most bullish, and these symbolize the price action closing relatively strong or closer to the open. Obviously this one's going to be stronger than this one because it closed more at the high. This I don't consider this an indecision candle, so to speak, because at one point it was solid red all the way down, and then eventually it got bought back up. We turned green, but we closed near the highs. Okay, but these are going to be the second most bullish. These are going to be the third most bullish, because what they're showing you is they're showing you that there's a lot of resistance up here. And the resistance is so strong that it's causing the candlestick to close with the body being shorter than the wick. And that's not a strong sign. You see, the upper wick is longer than the body. It's not a sign of strength. But it didn't sell all the way off. It did close, above the open. So it remains a, bullish candle. But it's not, as bullish as the first two. Now this is the fourth most bullish, and it's really bullish only because it closed slightly above the open. That's what made it green. But indecision is what ruled this time frame. You went up, ran into resistance, came down, ran into support, ran up, moved into resistance. But it is kind of a weak bullish candle. And then this is the weakest of the bullish candles. Anytime you see something like this, where it was solid green at one time, it pulled all the way back and practically opened just above the close. So it closed just above the open. Okay, likewise, this is the weakest of the bearish candlesticks. This was solid red at one point, but ran into support and it closed near the highs. That means the momentum going into the close of this candle was bullish. That's what that means. So that's why this is the weakest of the bearish candles. Alright, so this is the second weakest. This is another one that opened at the top, sold all the way off, had a solid red candlestick, and then going into the close it got bought up a little bit, but we're still, well within, we're still have a body that's really longer than the wick, and we're still closing really close to the bottom. So this is the second weakest of the bearish candles. And this is the weakest. Okay, this is the weakest. Whenever you see a solid green or solid red candle, those are the strongest candles on their respective sides. Okay, and the reason why I wanted to go over all of this is because what you're going to want to do this week, is be able to just start looking at the chart, looking at what's forming, and coming up with coming up with your prediction as to which direction you think the stock's going to keep going. So we can start all the way over here to the left. Look at this, is a big indecision candle. A big indecision candle. So at that point, we don't know whether it's going up or down, right? We have no idea whether it's going up or down. So at this point, we're just waiting. So the next candle opens. What's the strength of this candle? Is this candle a little bit stronger than this candle? Yeah. We're still showing some action to resistance, above it trying to move up. We do see that. But this is still bullish. Look at what the next candle does. This is, one of the most bullish candles. So if I'm sitting here, reading this, if I was going to get in, I could get in right here. Let me get my... Yep, I would get in right here. As soon as we broke that, and you can see the profit we've got. So when we're starting to get to the top, what are we running into? We're running into resistance. Look at the wicks. These wicks are telling you something. If you're sitting here and the last three candles have wicked out, that's kind of telling you that, hey, this is, the price action is not the greatest up here. We're dealing with not a lot of buyers running into some big sellers. Now, you don't want to quit or give up on the trade if technically it's still going. Just because we made a lower low here doesn't mean the trade is dead. This is where you have to look at price action. You have to look at maybe the moving average. But whatever the case is, you do pay attention to this, but you don't make a hasty decision. Okay, you're gonna have to decipher this. So we're seeing these wicks up. This is telling us we're running into serious resistance that keeps slapping it back. But here, our support, we almost kind of dipped below it, but it held its ground. And so now, things are gonna start to give you a little bit more clearer picture. But then this candle prints. What is this telling you? We're getting weak. And then all of a sudden, the next candle, the bottom falls out. Now, how many of you would stop out here? This is your entry. I know it's not straight, but this is your entry. How many of you would stop out here? And be honest. Most of you would probably stop out. Most of you would probably stop out on this pullback. Alright, this is our entry. We were green up here. This starts to sell and you get spooked. Now, if you didn't stop out, if you say, no, I'm not stopping out, give me a reason why you didn't stop out. What made you not stop out? If you didn't stop out, why wouldn't you? Yeah, it didn't take, it never took out your entry level. It never took it out. Yeah, it pulled back. It looked somewhat weak. But guess what? This candle never made a lower low relative to this candle. Never made the bottom of this candle. So we're still in play. So a lot of, and this is why I say, learning how to read price action is the best way to manage your risk. That's going to allow you to actually maximize the effectiveness of the charts and your trade opportunities and still manage your risk. You're still able to manage your risk. So some would have been scared out and dropped out, and they would have waited until it got back up here. They would have waited and bought it here. And when it started to come back, even though we haven't closed below this level, some might have stopped out again. Frustrated because they lost on this, and then they lost on this. And the stop just runs without them. So being able to read price action is what keeps me in trades longer and allows me to withstand either some of the drawbacks. All right, so let me ask you this. Take a look at this chart and then take a look at this chart. Oops. God dog it. I hate this thing. Hold on a second. I'll get it back right. Alright, so I want you to take a look at this chart. And then this chart. This chart, then this chart. Which one is easier for you to read? Which one is easier for you to interpret? The first one or the second one? Yep, second one is easier to interpret. The second one is a 5-minute chart. The first one, this is a 1-minute chart. Look at how choppy and frustrating the 1-minute chart can be. And then look how smooth so what I want you to do this week is watch the candlesticks form. Take your time, watch the candlesticks form. And in practice reading them. Practice interpreting them. Now next week, we're going to start putting these candlesticks together and kind of going over what they could be telling you. So that when you're in the middle of a trade and you're trying to figure out what's happening, why is something not doing what you would expect it to do, you know, you'll be able to analyze it and make better trading decisions. Yes, that was Tesla today. That's pretty good that you're able to identify that. That means you are paying attention to the charts. And that is awesome. All right, any questions? Now next week is going to get a little thick. I want you to be able to look at all of these candlesticks and identify where they fit in the bullish or bearish scale. And that's going to be important. Where do they fit? And I think I had a good think I had a good slide that had a good. Hold on a second. Give me 1 minute. I need to share something here. I know some of you might think you're moving too slow. You're not. It takes time. And if you rush it, you will screw it up. Alright, so what you want to be able to do is look at the candlesticks and determine where they fit in this scale. Okay, where do they fit? You know, neutral is going to basically be a doji. But, you know, any stock, whether it's red or green, if you have a tiny body and then, you know, larger wicks, that's a big time indecision candle. And that means the next candle, it can go either way. So you got to start reading, you know, zooming out and looking at the formation. And that will give you an idea of where we could be going. And if you're looking to take a trade and you're waiting for the setup, it can tell you that, hey, the setup is about to happen right here. Alright, so you're going to need, if you have trouble with this, then you need to shoot me an email. But you're going to need to develop this, you know, get this in play before we move on. Where does a green hammer fit in? You mean if this is inverted? Give me your thoughts. Where do you feel, based on what you learned about the candlesticks today, where do you feel it should go? You got it. See how easy that is? You see how easy that is? I would put that candlestick, if you flip this, I would put that somewhere in here. Because guess what? That was a solid red candle at one time. And then it got aggressively bought back up and it closed at the high. You know, that anything that closes at the high after a big run down, that's showing momentum to the long side. That is a very bullish candle. You know, if you closed above where you open, that's a very bullish candle. You see a T looking handle, what would that signal? So you mean if you see a candle like this, oh, T at the very top? I'm trying to see if I got one here. if you see a T at the very top, for me, I'm going to tell you what that, I'm going to tell you what I think it is. And then I'm going to show you, because I had that on the one last week. Okay, and you can use these cheat sheets. You know, you can use these cheat sheets. I don't have a problem with that. Just make sure you know you're able to recognize as the price action, you know, is coming into play. So here, what this is showing is neutral. Okay, this is showing a neutral. That means the open and the close is basically at the same price. Now, even if you look at these candlesticks and they're opening at the same price and closing at basically the same price, whether this is green by a couple of cents or red by a couple of cents, what this is telling me here is that it tested the waters down here and it did not like it. And it ran back to mama. It ran back home to mama. Now, it's still, even though you've got this momentum coming back up, there's no guarantee that a stock that ran back home to mama is going to make that move up. I know we look at this as a bottoming tail, and you know it's telling you that the buyers have taken control. You know, they may have. You're not going to know until that next candle hits. Same thing with this. We would call this a topping tail, and that means the sellers have taken over. It ran into some resistance and it just flew down. Okay, look at, you can see this, this is the hammer you were talking about. I would have, and I don't think this is listed in terms of strength. Okay, this is probably one of the weakest bullish candles I like, because look at what happened. We closed, we came back and closed off the highs. What this means is this candlestick closed with bearish momentum. This candlestick closed with bearish momentum. So this will be flip-flopped. This closed with bullish momentum. So this one, if we were assigning this based on strength, this would be here and this would be there. And then you've got the indecision candle that closed slightly above where it opened. Doesn't mean a damn thing. Okay, just like this one closed slightly below where it opened and made it red, these are both equal. These are both equally dumbfounded, because they don't know what the hell they want to do or be. Okay, does that make sense? Is this making sense to you? Because that's the key right now. I need it to make sense to you, so you can understand, you know, what I'm looking at when I'm talking about price action. You know, the candlestick is the foundational piece. Learning what each candlestick means is imperative. What a lot of people get messed up on is trying to learn how to read Let me see if I can find. Hold on. You're trying, people are trying to, come in and identify all of this without learning what each candlestick means. And so it doesn't make a whole lot of sense, and they're not able to use it to their advantage. See, once you learn what each candlestick means, what each one is telling you a story, and then you're able to put these candlesticks together, it's able to make more sense to you. Like this, you've got a big candle moving up, and then you get, this candle, which could be considered a bottoming tail. Look at the wick to the short side is a lot bigger than the one to the long side. And then this candlestick closed at the low. It actually closed, starting to go back down. And then this candle opens and it starts to sell off. And what's it going to tell you? Is this telling you that it's bearish or is it bullish? Then you got another one here. But I can't confirm what they call an evening star. I don't use these terms. I'm looking at the candlestick formation. I'm not looking to identify some type of pattern. I'm taking this and I'm saying, okay, now I need to see what happens with this candlestick. Are we going to come down and take out the low? Because there's no short trades on this until you take out the low of this candle. So this isn't complete. You still need to wait for the next candle to confirm what's happening here. Same thing here. So price action is key when you're trying to figure this stuff out. And when you're comfortable and confident doing it, trading becomes really simple. That's why I'm taking you through this journey. So if you're patient with me and you walk with me through it, you should come out on the other side confident in your ability to read price action and come up with what's likely to happen next in the market. Or is the market likely to continue to trade sideways? Where does it have to break? What channel has to break before it starts to move up? And then when you see the break, you read the candlesticks to determine, is this a false break or are we just baiting above a certain level? All right, everybody good? And like I said, when you're trying to do this, if you have problems, shoot me an email, or you can set up a mentor session before we meet again next week on this. All right, so it's all about helping you build your confidence in this market. And this will go a long, long way. because you'll be confident in what you see. You won't be guessing.